Hey guys, so April has come to an end and now we are approaching a new month, which is May. Now I want to do this video for the first time, which is looking at market review and what we can expect in the upcoming month. Alright, without further ado, let's dive into it right now. Let's begin with the US markets. The S&P 500 is up 4% during the month of April, so that's a pretty good start to Q2 of the year. Nearer to home in Asia, looking at the Hang Seng Index is up 1% in April. Singapore, the Straits Times Index is up only 0.48%. And at home, the FBM KLCI is up 1%. If we look at the year-to-date numbers, again for the four index, the S&P 500 is up 8% during the year. The Hang Seng is up 1.6%. The Singapore Straits Times Index is up 0.82%. The FBN KLCI is down nearly 5%. But still, just looking at the year-to-date numbers, it doesn't really tell much as well, because even if the S&P is up 9%, even if the rest is down or up just a little bit, the position might change for the next 8 months of the year. So what is a better indicator of what might be the movement? We'll be looking at the technical charts. Let's look at the chart of the S&P 500 index. Now, over the long term, S&P 500 is always on a clear uptrend. Alright, so if you invest and you do nothing, like more likely than not, you will probably earn money from that. Alright, but looking at the short term, well, it's actually pretty much on the uptrend as well, although you can argue that it has been on the downtrend since last year. Alright, but the trend has kind of reversed because as you notice, the moving averages is starting to slope upwards. So it's a pretty good sign that it might be on the uptrend. So even if you ignore the moving averages, just slowly looking at price action, we can see that the prices have been making higher highs, and it has also been making higher lows. Alright, so this is a pretty clear uptrend, and currently the S&P 500 is facing a pretty strong resistance level. So as you can see here, this is a pretty strong resistance level. This is support. This was a support, then turned resistance, resistance levels, resistance, and resistance. And if you draw a trend line further, it's kind of forming a triangle pattern. So we might expect a breakout to happen where it starts to move even higher from here on. Or it might retrace slightly downwards back to previous spots like this trend line. Then it might continue upwards as well. Or if things are worse than expected, it might actually go down further and continuing the bear market from last year. In the month of April, we have already seen companies reporting earnings. Companies like Microsoft reported better than expected earnings, and prices have been moving up pretty fast. Google as well reported better than expected earnings, move up a little bit. But a more notable mention will be Meta. Meta has moved up a lot this year. It's pretty much doubled after it announced a lot better than expected earnings and future prospects. But I would say the markets are pretty stretched at the moment. So I've not been buying anything in April. So I'm actually secretly hoping that it kind of retraces a little bit back to the support level before moving back up, because I want to buy a little bit more before the next bull run happens. So what can we expect in the month of May? A lot actually. First off, the biggest thing that most people are concerned about is the Federal Reserve, aka the Fed's FOMC meeting. It will happen in the 2nd to 3rd of May. So we will expect another round of perhaps interest rates hikes, or it might lower it, or it might just stay the same. Looking at estimates from CME FedWatch tool, they are predicting an 85.2 probability that the interest rate might increase from 5 to 5.25%, and only a very low probability of 15% of remaining the same. Other than the FOMC meeting and interest rate hike, we can also expect another round of inflation results to be announced around May the 10th. So these two results might affect the stock market as well. Alright, currently the stock market is already up pretty high and is approaching a resistance level. So these two results would change the emotions of the market, or it might just continue the bull run if things are better than expected, or if things are worse than expected. Maybe, for example, the Fed has increased a lot higher interest rate than this, or inflation is worse than expected, then we might even see a retracement or even continuing the downtrend. But ultimately, it's pretty hard to predict how the market is going to move, so we're just gonna play by ear and see how it goes. So yeah, that's on the US front. Lots of exciting things happening, and so far it has been a good year for the US market and the S&P 500. But how about Asia then? Looking at the Hang Seng Index, well, it has been on a very strong downtrend ever since the end of 2021, when the Chinese government started announced crackdowns on various industries. But ever since the reopening of the economy back in end of 2022, it has been up pretty strongly. And currently is in a consolidation pattern. The moving averages are moving sideways and they are closing out on each other. So it might move up or it might move down from here. But ignoring moving averages, if you just look at the price action, well, there is a triangle pattern that is kind of forming over here. So similarly, when this triangle breaks up, it might go up higher or it might even go down lower and continuing the bull market downtrend since 2021. Singapore Straits Times Index is a pretty stable market, not much excitement going on. It has been a pretty strong sideways pattern ever since 10 years ago. Alright, so not much excitement over here, but just that now it's more on a higher end of the consolidation pattern. So, you know, in a consolidation pattern, when it reaches the higher end, we might expect it to come down, or it might just continue left and right. Right. So Singapore, nothing exciting. But if you want a strong, stable dividend play, Singapore is a good market to play with. Then going to home, the Bursa Malaysia KLCI index, sadly to say, it has been on a downtrend even since 2021, similar to the Hang Seng index. But the KLCI is not showing signs of a reversal. Okay, moving averages are still sloping down. So sadly to say, as Malaysia, I'm not proud of my local stock market. Right, it's on the down. Then you can see it's pretty obvious it's going down, and there's still no signs of going up, even by looking at price action or even moving averages. Some of you might ask me, why am I so focused on the US market? Even the upcoming things that we can expect in May, I also talk about US FOMC meeting and the US inflation rate release. One reason is because US being the largest economy in the world, anything that happens in the US will have a spillover effect over the entire world. Secondly, the US is still the strongest market to invest in, ignoring Forex. Looking at the past 10 years plus, around there, the S&P 500 is up almost 200%. Hang Seng is down 7% over the past 10 years. Singapore is up 8%. At home is down 10%. So what this means is that if you have invested in the US market for the past 10 years and you did nothing, your portfolio will double compared to the rest, which is single digit or even losses. Alright, so that's all the analysis I have for now. My thought process, looking at the charts, looking at the facts, looking at what is going on. Thanks for staying until the end, and I hope that this analysis is pretty useful for you, or if it's not, you can always put your comments and thoughts in the comment section below. And if you enjoy content like this, do also let me know, so I will post more content like this, looking at reviews, looking at how things are going on in the stock market, not just the US, but perhaps even other markets like the Hang Seng or even closer to home at Bursa. And with that, I will see you in the next video.